Well, I was curious about one of your recent macro observations where you said that the bull market could continue into 2022. What are the signs that you saw that indicate that?
Yeah, it's so one of the ways in which I measure demand and supply, and ultimately a lot of the things I do on chain is grappling with like what is the real demand and supply between investors. Like there's a ratio you can run between, it's really simple. I call it supply shock. It's how many coins can't you get if you want to buy versus the coins that you can get. So, you know, as the amount of coins grow that in the supply that aren't selling, I'm not selling, versus the people that are super speculative and they'll sell it at any price if they think the price is going to go down. So you run that ratio, and there's many ways you can like go who's not selling versus selling, right? There's many views into that lens. And one of the lenses that Glassnode use, which is the provider of data I use mostly, they look at who are long-term holders based on their coins not moving for 5 months. So anyone who's held their coins for more than 5 months, those coins aren't moving. They haven't moved in 5 months. They're probably not going to move. You're not probably going to be able to buy those coins. Whereas any coin that's been circulating within the shorter time frame, there's a fair chance you can get those coins because they'll be moving between hands, you know. And so you run that ratio, and because it's a very long term, it takes 155 days for a coin to age into from short term to long term. It's a very smooth graph, and it's very macro. It's very sure, right? It's very like once a coin's reached 5 months of age, it's unlikely to change its behavior in a volatile way. And so when you run supply shock on that, you'll see the demand, essentially supply shock going up to these peaks, and those peaks coincide with mass accumulation by these long-term investors, and they also coincide with all the historical bottoms where a floor was put on the price by long-term investors because they keep accumulating, and anyone who's selling, they buy, and it keeps the price at the bottom. And eventually, once it dries out, no one's selling, the selling's exhausted, price moves up. And so we were in one of these accumulations. The last one ended at October last year. We had a decent spell of many months where we're at peak accumulation by these long-term holders. And then the price started to run up, and it started running up. And then those long-term holders started to divest and sell their coins out. And that actually has led, it culminated with the price dropping down to our $30,000 range from the 60 to even 64,000. And then since then, the same pattern's happening, that they're accumulating, but we're not actually at peak accumulation. And it takes, you can gauge the time, you kind of gauge the time in which this happens. And I'm like, it looks like we've got another at least a month or two to get to fully accumulating based on historically, it takes this amount of time. And then after that, with high probability, you can say, well, once they're accumulated, then the prices can run up because all the coins are taken off the market. And then it takes months for that to run up, right? And so like you work out the time frames, it's like, man, we're going to blow past this year and we're going to keep running up. And like every bull market in the history of Bitcoin tends to peter out around the Christmas time of the year following the halvening, which we had. So the schedule really is for this bull market to peter out around December onwards. And currently the on-chain data is saying otherwise. And again, it's really difficult to mess with the fundamental data. Like people were wondering what is the top for Bitcoin? When will it happen? And I just said at the start of this year, I do not know. I can only look for the 3 months ahead,
Yeah.
maybe 6 months if I'm lucky. And now that we're approaching our fourth quarter, the data looks quite different from any other cycle we've seen before. And people keep thinking that we'll, template this bull bear cycle to past ones. And if you look on chain structurally, everything looks different. And actually every cycle was structurally different as well. So yeah, I think it's a fair chance that we'll not go into what we think, which is a traditional, Bitcoin bear market, which generally is a huge retrace of maybe 80% of its value. And it also takes about 9 months to a year to shake out. I don't think that's going to happen. And I think now, judging from the maturity of this market and the impacts of the different parts of the demand and supply from different parts of the ecosystem, we're breaking out of this 4-year cycle, which was really contingent on, the network being programmed to have its kind of newly mined coins every 4 years. Like that drop in the new coins being dumped onto the market is now quite insignificant. And I think that taking that all into account and what I'm seeing on chain, I don't think we're going to have like what we see these normal 4-year cycles again. I think I'm calling this the last cycle. And